there. So let's probably begin. Once more, I'm happy to greet all of you here at our seminar. It's our sixth seminar since the beginning. We have had 7 main speakers. They provided us with very interesting ideas and discussion. As far as I see, it was very interesting. And one of the questions we also were discussing was that of financial repercussions of this coronavirus crisis. And today, our main speaker,
warning,
is the first director.
896 items, which can be critical to your Microsoft Windows 7 system performance. Click on Start Repair to fix these items.
May I kindly ask everybody to switch off the sound when not speaking, because otherwise we'll have problems. So today our main speaker is Mikhail Golovnin, first deputy director of the Institute for Economics of the Russian Academy of Sciences, and also he's our colleague at Moscow School of Economics, professor at Moscow School of Economics. He has been working with us from the start, from the very start. And now he's going to make a presentation on transformation of monetary policy during COVID-19 crisis and beyond. So I think that we are going to have a very interesting discussion today. So, Mikhail, the floor is yours.
Thank you very much, Alexander Dmitrievich. And I just want to note that my report mainly will be connected with more with the institutional frameworks of the monetary policy, less than some statistical figures, because they have not come mainly yet, but I think we can discuss them maybe later or during our next sessions. So can everybody see the presentation?
Yes, it's okay.
Okay, I think it would be better, yeah? Okay.
Fine.
So actually my topic is the transformation of monetary policy during the COVID-19 crisis and beyond. But from what should I start? That the actual transformation had started not just this year, but what is clear, well, it was started almost 12 years ago. It was started during the global economic crisis, and after that have seen those institutional frameworks to which partly or sometimes they were continuing changes, the main transformations of monetary policy during that crisis. Probably the most important ones were the introduction of so-called unconventional money.
Oh, we don't hear you, Misha.
US introduced just from the beginning of the crisis, as some other advanced countries, and they lasted till 2014. For example, Euro area started with unconventional practices a little bit later, after the European debt crisis, although some elements were introduced also after the global economic crisis. The interesting case is Japan, which started with practices even before, just in the beginning of the century because of its national economic problems, and then it renewed these practices just after the global economic crisis. What I should point out that from my point of view, and also some other experts, there are two main directions of these unconventional policies. One direction is aimed at selective support of some financial markets or economic agents, mainly financial institutions. This straw of unconventional monetary policy was mainly developed in so-called Anglo-Saxon countries, and the most important it was in the US. The other part of these unconventional policies was more widespread, and it was aimed at economic recovery, but also it has the aims of supporting financial markets too, but not the selective segments of these markets, but the markets as a whole mainly. So what would I mean? For example, if we are talking about the first direction, we should just look at the special measures of the Federal Reserve System, which were introduced during the global economic crisis. They were in force from 28 till some of them till 2010, but they were gradually suspended during the period after the verge of the global economic crisis. If we just look at the names of these measures, we can see that actually they were aimed at different parts of financial market, like money market, commercial paper market, or some asset-backed securities markets, or at some particular financial institutions, groups of financial institutions, like, for example, primary dealers or some participants of money market, for example, some mutual funds on money market. And as I have already said, these measures were more or less temporary. They were dedicated to the verge of the global economic crisis, but we should remember about them a little bit later. Now let's turn to the second direction, which is a more broadly used term as quantitative easing programs. They were different in different countries. For example, in the US, we can see 3 rounds of quantitative easing. As I have already said, they started at 28 and ended at October 2014. And also there was a maturity extension program, but this was not an actually asset purchasing program. This was more like a redistribution of assets, not buying new assets. Euro area joined this process, as I have already said, a little bit later. Large asset purchase programs were introduced since mid-2014, and some of them even later. Actually, there were 4 main asset purchase programs, like covered bond purchase program, asset-backed securities purchase program, public sector, and corporate sector purchase programs. So they were aimed at the segments which, of course, you can read, and they were aimed at supporting, as I have already said, large segments of financial markets and also the economy as a whole. Although the main economic slowdown in euro area came in during global economic crisis and during European debt crisis, when actually unconventional monetary policy were not implemented, as ECB was still supporting the positive interest rates. The Japan case is interesting because they introduced the quantitative monetary easing policy even in the beginning of the century, and probably to some extent it was a kind of an example for other countries, although I think they introduced these programs rather independently during the global economic crisis. And because Japan just finished this program before the global economic crisis, and it came through the crisis without such a program, though of course it was implementing the active monetary policy, it again started actually unconventional monetary policies since 2010, and actually till now somehow changing these frameworks. Now it is called quantitative and qualitative monetary easing, supplemented with yield curve control, and it is a part of so-called Abenomics, etc. So this is concerned with so-called advanced economies, and of course, there were some other changes, not only the introduction of unconventional monetary policies during the crisis, some terms of money creation were extended, and of course the number of participants with interacting with central bank also was extended. We have already seen it just from also some other unconventional monetary policy programs. Please turn off the sound. Okay, thank you. Thank you. And we can see also some kind of international cooperation during that crisis when Federal Reserve and some other central banks introduced international foreign exchange swaps programs, just providing the liquidity in the currencies of these countries, first of all, of course, in US dollars. And again, if we look at the other group of countries, I mean emerging markets, economies, and so-called developing countries, I focus more on emerging markets, we cannot see such global shifts in monetary policy implementation, although we can see some interesting changes too. First of all, just formally, we can see the rise of number of countries which were implementing inflation targeting frameworks within their monetary policy frameworks. For example, if we compare the dynamics just for 10 years from April 2009 to April 2019, these data were taken from IMF annual reports, their classification of de facto monetary policy frameworks. We can see that although some others framework were more or less constant, we can see the rise of inflation targeting countries from 29 in April 2009 to 41 in 10 years. Of course, you can ask from what countries these changes were taken, because of course there were other frameworks, and I just focused on so-called formal frameworks. So many countries from other frameworks joined inflation targeting, but we also should focus on sometimes so-called formal and informal targeting, when countries, for example, implementing two kinds of monetary policy frameworks. This is sometimes the case, for example, with monetary targeting and exchange rate targeting. Many countries just pursuing both these goals, both these frameworks, like, for example, China. And if we look at the situation from which we have entered this crisis, we can see that, of course, after the global economic crisis, we can see a drastic fall in cross-border capital flows. They reached some kind of a peak just before the global economic crisis in 2007 and sometimes 2008. And just after that, there was a collapse in cross-border capital flows, because we can see so-called the capital flight to their home. And we saw that after that, practically in no one large international financial centers, nor in United States or Euro area or Japan or United Kingdom, which is a very big international financial sector, and that's why you should look at the right axis to see how the cross-border capital flows connected with United Kingdom on this graph. And these are relative indicators, they are relative to the domestic GDP. And so we can see that although there was some kind of rebound in international capital flows in the mid of previous decade, but again, we see that there was a fall in these flows just before this crisis. Well, there can be different explanations. It can be a part of some kind of protectionism, which we can see, for example, in trade, or it may be a part of some other processes too. But what we can point out that we enter this crisis with less cross-border financial flows than the global economic crisis. So we have already seen a lot of forecasts before that, and I just wanted to remind you and probably put some newer forecasts, for example, the forecast of the European Commission. And if we look, for example, at forecast for GDP dynamics, we can see that forecasts became worse, actually. For example, they became worse practically for all countries and groups of countries for which European Commission made their forecasts. So it seems that the economic impact of this crisis is protracting, and of course there should be a need in active economic policy to came through the negative economic impact of the crisis. But what should I focus before I turn to monetary policy impact on this crisis is that from my point of view, of course, if we choose between two kinds of economic policies, I mean fiscal policy and monetary policy, of course, fiscal policy is much more important in overcoming such kind of a crisis. Unfortunately, we have not had a presentation on fiscal policy. I hope there may be one on it, but of course it is important. And as for the monetary policy is concerned, from my point of view, the main need for monetary policy may be not now, but a little bit later. But I try to explain why. So again, if we look at the inflation forecast, this is the IMF forecast, we can see that actually, as we can expect, the crisis puts some deflationary pressure on inflation rates. Of course, this is the case if we consider the crisis either as a supply side crisis or demand side crisis. Anyway, there can be some implications for some groups of countries which I follow a little bit later. So again, for example, after the crisis, there may be some acceleration on deflation rates because of these supportive economic policy, which we can see now both from fiscal and monetary side. So if we look at the reaction of monetary policy to this crisis in the US, we can see, first of all, that the US, unlike some other countries, for example, Euro area, entered with this crisis with positive interest rates, positive central bank interest rates, like it was before the global economic crisis. We can see here the dynamics of federal funds rate, and we can see that until end of 2018, there was a cycle of increasing federal funds rate. It was actually ended in the beginning of 2019. From my point of view, this was because of support of stock market in the US and stock market, because of stock market negative developments in 2018, but there also may be some other explanations like overcoming some negative consequences of trade protectionism and so on. But anyway, we can see that even before the COVID crisis, we saw three rounds of decreasing of federal funds rate in the previous year. And very quickly in March of this year, we saw that our Federal Reserve System turned to zero interest rate policy, just in 2 steps. And again, we can see in the US the situation which was similar to the global economic crisis, the situation of zero interest rates. These actions were supported by so-called forward guidance. This means that monetary authorities declared their future policy just to influence the expectations of economic agents, and they have stated that rates will remain low until it is confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. Of course, this is not very clear. This is not the quantitative, some kind of quantitative goals of overcoming this policy. But anyway, we can see that this policy, I mean zero interest rate policy, can be rather prolonged. We can see also, it is very interesting because this was not the case during the previous crisis, that Fed reduced reserve requirements ratios to zero. This is a quite interesting step because this means that they just rejected this monetary policy tool. Of course, this does not mean that commercial banks wouldn't hold their balances in the central bank, because it is important both for settlements and for some other issues. But again, this is some kind of supporting of the banking system in the US. There were also some other measures like the so-called open, I can call it wider opening of discount window. This means that decrease of interest rate on discount rate, and the extending of terms of discount credits. But of course, this is the case. The increasing of terms is the practical case for almost every crisis, although it was the case during the global economic crisis, because we just we cannot know for how long it will be prolonged. And what is also interesting, that somehow discount windows is viewed as some kind of a punishment for banks. So those banks which use the discount window, it seems that they are maybe not very stable, and that's why, for example, 8 large banks were adding the discount window of the Fed just in order to so-called not to make it the black sign of turning to discount window. And also we can see the introduction of new and most of them actually old unconventional programs. During this crisis, these programs had a wider sphere of their use. They were not just to support it, for example, several segments of financial markets or several groups of financial institutions. Actually, we were aimed at supporting practically all the sectors of the economy. Financial sector, corporate sector, households, even public borrowing. So this is quite a very different shift in monetary policy from what was during global economic crisis. We can call it some kind of developing this unconventional monetary policy, but this can lead to very interesting results from the point of view of its future implementation. And again, Fed also entered once again the practice of providing international liquidity from foreign exchange swaps. For example, if we look at the already mentioned instruments, they are just mentioned here. I mean the unconventional new unconventional monetary programs of the Federal Reserve. We can see, for example, again, primary dealer credit facility or commercial paper funding facility, but we can see also, for example, some new instruments like primary market corporate credit facility or secondary market corporate credit facility, which are actually the support of the business sector just from the central bank, which is usually is not viewed as the primary goal of the central bank. So actually, during the count time, it is prohibited, like the supporting of budgets, both the state budget or, for example, regional budget. But again, we can see the municipal liquidity facility, which is aimed at maintaining the municipal bond markets in the US. And so we can see also there is a special program, it is called Paycheck Protection Program Liquidity Facility, which is aimed at small and medium enterprises. So it became evident that central bank focused not only on financial sector like it was during the global crisis, even if we look at it at wider extent, not just banking sector, but also financial markets, but even at the, again, at the whole group of economic sectors, macroeconomic sectors, which for me seems very important from the point of view of monetary policy. If we look at euro area practices, we can see more or less the continuation of the programs which were implemented, because as I have mentioned, ECB, European Central Bank, started unconventional monetary, large set of unconventional monetary programs in mid-2014. And actually, we were continuing during all this time, maybe with some small interruptions, but because of the problems with economic growth, actually, European Central Bank entered this crisis, and this was not the case during the global economic crisis with zero interest rates, and actually, unconventional monetary policies already in force. I mean those 4 programs which I have mentioned before. Although besides these programs and some other programs like targeted longer-term refinancing operation, which you can see already the 3rd program of the European Central Bank of such a kind, it introduced additional programs, like, for example, not targeted pandemic emergency longer-term refinancing operations, or a new kind of asset purchasing program, which is called Pandemic Emergency Purchase Program. And already during previous 2 months, I mean March and April, cumulative net purchases by ECB of different assets through this program amounted more than 118 billion euro. And also the ECB somehow changing the framework for the collateral which is used by the central banks to provide the liquidity, national central banks to provide the liquidity for commercial banks. And there have already existed the so-called additional credit claim frameworks, which allowed national central bank to widen these collateral lists. And because of this new crisis, again, this list was extended, and on April 7 of this year, actually ECB Governing Council allow the extension of this collateral list almost on a very wide range of instruments like corporate, small and medium enterprises, obligations, self-employed individuals, households, and so on. So again, we can see that the central bank activity is widening to other sectors. Of course, there are differences between, in the US, we face with the financial system, which is based mainly on securities markets, and that's why they were implementing such a large set of programs which I have mentioned. European financial system is more bank-centered, and that's why they more rely on these collateral as the support of the central bank support of the banking system as a whole. Again, if we turn to emerging market economies, we again see a little bit different part. Of course, those programs, I mean unconventional monetary programs, were not the case for most part of these countries, although some of them have introduced some elements of unconventional programs, as it was the case also during the global economic crisis, when in some countries central banks also purchased, for example, government securities and so on. During this crisis, there was some room for maneuver from the point of view of interest rate cut. And if we look at the March-April statistics, we can see that in some countries, these cuts were rather large. I mean, first of all, Egypt, Turkey, South Africa, Pakistan, and so on. And also a very important task for the emerging markets is to support the exchange rate, because the exchange rate is a very sensitive macroeconomic indicator for this group of countries. And actually, even from previous global economic crisis, though these countries, for example, were introducing inflation targeting frameworks, they still, to some extent, maintain the rather active exchange rate policy. And again, it was the case during this crisis. Of course, some of these countries have faced pressure on exchange rate. If we look at this graph, we can see that actually, of course, the volatility of exchange rates in emerging market economies is rather large. And again, we can see that during last month, for which we have statistics from Bank of International Settlements on nominal effective exchange rate, and this graph is nominal effective exchange rate of these countries, we saw a significant drop of this exchange rate in practically all the examples I have used, except for China. For example, in Russia, Brazil, South Africa, or Indonesia, we can see a drop in effective exchange rate. Of course, in some countries there was some kind of appreciation after that, like in Russia. But anyway, these countries have implemented strong policies towards supporting these exchange rate dynamics. They can be either direct foreign exchange interventions, like it was the case, for example, in Brazil, Egypt, Indonesia, or some other countries. Or, for example, through some forward swaps or repos, or they are not interventions on spot foreign exchange market, but in other segments. Also, we will introduce some special central bank instruments for providing forex liquidity, or they were broadened. This also was the case in some countries, Brazil, Indonesia, Turkey, etc. And as I have already said, the Federal Reserve opened the foreign exchange swap line, which was also used by some emerging market economies. Korea, Singapore, Mexico have already used these lines. But very interesting question is about the support of exchange rate through foreign exchange interventions. If we look at the amount of international liquidity, this means the gross amount of all foreign exchange reserves minus gold of all the countries. We can see that there was a rather steep rise of these reserves in the period preceding global economic crisis, and even after this crisis. Actually, we haven't seen even the decrease of these reserves during the global economic crisis. We saw only the decelerating path of the growth of these reserves. But from the year 2014, we saw even decrease, and after that, was revival and stabilization of international reserve liquidity. This is, of course, mainly the changes of foreign exchange reserves in China, because China responds for a large part of these changes in international reserves. But also with other countries, so we again cannot see a large impact on exchange rate through direct foreign exchange interventions, and I will focus on it a little bit later when I will talk about Russia. And now let me turn to Russian economy and monetary policy of Russia, which of course I think the case which is interesting for the most part of our speakers, but I think also for our foreign colleagues too. So again, if we look at the level of openness of Russian economy, of financial openness, I again use the same indicator as for major financial centers. I mean, this is the gross capital flows, the sum of the different parts of financial account of balance of payments. These are direct portfolio and other investments, irrespective of their sign. So these are, again, gross flows, both assets and liabilities. And this is important for Russia, which is both the large capital exporter and importer, actually was, but we now saw that after the global economic crisis, and especially after the period of introduction of economic sanctions, we saw the decreasing path of the level of financial openness of Russian economy. Although if we look into account, for example, the reserve assets, which is the important part of the capital flows in emerging market economies, we can see a little bit different picture with increasing path after the crisis of 2014 and 2015 in Russia. We cannot say that Russia does independent from the foreign capital flow. This is not the case because on several segments, like for example the local government bonds, I mean government bonds which are denominated in national currency, we saw a very large participation of foreign investors. By the way, this is not the case of, for example, the period before global economic crisis. The steep rise was even during the period of economic sanctions. And we can see, for example, from 2015 to 2018, a large rise in the share of non-residents in this market to almost 35%. And again, after some drop in the year 2018, this was connected with some problems on oil markets and capital flows and the expectations of new sanctions. Again, we see the rise practically till the same level just before the COVID crisis. Although during the crisis, we have already seen some decrease of this share, but again, this is not so huge. Let's look at the future, but till now, this segment is rather sensitive. For example, for Russian monetary policy and Russian financial market developments. If we look at the main directions of monetary policy reaction to this crisis in Russia, we can see some common points with our emerging markets and, of course, some specific features. First of all, Central Bank of Russia is stating about the so-called structural surplus of liquidity in banking sector. This means that banks had a lot of money on central bank accounts, which was actually the case during the crisis, and is actually the case now. Oh, besides that, the situation differs from bank to bank. That's why the central bank introduced, actually reintroduced some kinds of liquidity providing instruments, like, for example, short-term repurchasing operations, and there were already some auctions and rising number of funds which were redirected to these mechanisms. The central bank
Mikhail,
of our country has cut the interest rate only by 50. Sorry, it seems that there was some kind of internet interruption here. Can you hear me?
now, yes, yes.
Yeah, thank you.
But before there were some interruptions, yes.
Yeah. But I hope everything will be okay, maybe. Can you see now
Yes.
presentation?
Yes.
Yeah, okay. Okay, so I'll continue. With Russian monetary policy. So this was a rather mild interest rate cut comparing with other market
Misha,
economies.
Yeah, unfortunately, we cannot hear you.
Central bank declared. Can you hear me?
No. Distortions, and you disappear. Your voice disappear.
Can you hear me now?
Yes.
dear colleagues, may I kindly ask you to turn off the sound? Please turn off your sound, because it interferes with.
Can you hear me now? It's
Yes.
better? Okay, thank you. So we can see that there were some declarations that there will be further interest rate cuts, but they were not the case yet. And also CBI introduced some kinds of policy which can be called the so-called credit easing. It means the easing of conditions of providing credits to commercial banks, and some kind of regulatory easing for commercial banks when they provide funds for economic agents, because this is, of course, a very important case now. But what I should focus that actually a central bank of Russia have not pursued exchange rate policies. We can see that exchange rate of the ruble was stabilized, and we can see that there was some drop in foreign exchange reserves. Can you see it in April? But this was a part which was not connected with foreign exchange interventions of central bank itself, because foreign exchange reserves are split between the funds of the so-called sovereign wealth of Russian sovereign wealth fund and the foreign exchange reserves of the central bank itself. Actually, central bank proclaimed that it had not pursued foreign exchange intervention, so this was on the part of this fiscal policy. And this was an important case because in Russia before that, actually the exchange rate policies was pursued by fiscal policy, not monetary policy. Because monetary policy is focused on inflation targeting framework, but fiscal rule, which is was implemented in Russia, because now it is, of course, somehow I think will be changing. We can see that the fiscal rule became a part of exchange rate policy in Russia. And also central bank had not implemented other mechanisms like foreign exchange swap or repurchasing agreements in foreign exchange, which it has, but they were not implemented. And also, this is an important point for me, that also no foreign exchange controls, no capital controls were introduced during this crisis, like it was during the global crisis, or like it was during the Russian economic crisis of 2014-2016. So if we look to some prospects, I'll start with prospects for Russia and I'll finish with prospects for the global economy. For Russia, the central bank is firmly focusing on the inflation targeting, and this was the declarations of central bank officials. Now the actual inflation is a little bit lower than the target. It is slightly more than 3%, and the target is 4%. But we should take into the mind that the inflation target does not mean that this is the exact inflation figure. Of course, sometimes the inflation can be higher than the target, but the Central Bank of Russia clearly pressed that for him this is the upper limit. This is the upper limit. Of course, now we can see, as I have already said, some pressures from supply side and from demand side on inflation. But from my point of view, there also can be some risks, some upside risks for inflations. I mean, first of all, from the exchange rate depreciation. I don't think that the depreciation we have already had in April is the last one, because of the so-called new normality now for Russia with lower oil prices. So I think that, of course, there can be other pressures on the exchange rate, and of course, there will be additional pressure on inflation, which actually was the case already during the previous depreciation, I mean in April, when inflation rate actually has risen. And from that point of view, of course, it is important how the central bank will react. Of course, main risks from the banking sector now, from my point of view, have not realized yet, and they will realize when the amount of non-payments will rise, and there will be an additional necessity to recapitalize the banking system, like it was during the previous crisis. And again, we have not now clear strategy how to develop banking system in this case. From my point of view, exchange rate policy should be implemented directly by the central bank, not through the fiscal rule, also because we simply do not know what will be with the fiscal rule in the nearest future. And because of, again, as I have already said, the exchange rate is very important macroeconomic indicator, both for economic and financial stability in Russia. I fully agree with Alexander Dmitrievich's statement, which we have already discussed his interview during our last meeting. I mean that topic on capital control introduction. We have not introduced it during the previous crisis, and I also fully agree with him that because of that, the costs of this crisis were higher. Now we have a little bit a different situation because, as I have already said, we have less capital flows now, but with less capital flows is also some kind of capital controls, but not capital controls from Russia, but capital controls from outside. I mean, economic sanctions. And I think this does not allow us to broaden the room for maneuver for monetary policy, for which case usually the capital controls, or for example, macroprudential policy are used in the emerging market economies. And if we look at the global context and broader context, we can see that from my point of view, those specific unconventional measures which I have mentioned, for example, in the US, they would be temporary, of course, when the financial sector again start to work, and probably it will be the case that central bank again will focus on financial sector, not on corporates, not on households. But this was already the precedent, and this precedent was very important from my point of view. Although I think that asset purchasing programs still continue because a zero interest rate policy still continue, like it was after the global economic crisis. It is actually the case with Euro area. I think it will be the case with the United States. And this means, those asset purchasing programs are, again, the increasing interaction between monetary and fiscal policies. And this interaction is not still very clear because actually, to some extent, central banks now breaks the rules which were established in previous time. It has already broken them during the previous crisis, when actually it is financing budget deficits. And this is also the problem of zero interest rate policy, because zero interest rate policy will stimulate the debt accumulation. And we have already had a large amount of debts in global economy accumulated, and this stock of debts, of course, will rise. And the question will be what can be done with this stock of debts. And from this point of view, it seems for me that this is important to add monetary policy with so-called macroprudential policy measures, which can allow, at least to some extent, cut this debt burden in some sectors. So it seems that, like it was after the global economic crisis, when macroprudential policy became a part of macroeconomic policy, now it again will be in close coordination with monetary policies. And again, it is like a dream for me, but maybe it may be a part of international financial system reform. Actually, some propositions were already made by China during its presidency in G20 to somehow establish some mechanisms for governing capital flows in global. Maybe it won't be some kind of Tobin tax, but again, some kind of regulation, some kind of macroprudential policies, coordinated macroprudential policy on global level. Because again, we can see some kind of contagions after the crisis, which were already connected, for example, with the end of the previous part of a quantitative easing policy in the US, when the negative results were spread through emerging market economies, and we can see the increasing volatility of exchange rates of emerging markets and so on. So I'll finish on it, and it would be glad if you ask some question or maybe add something to me. Thank you very much.
Thank you. Thank you very much, Mikhail. It was really very interesting. You've made a detailed presentation on the different aspects of the problem. And I see in chat, Jamie has made a comment on the specific features of the...
It would be great.
Sorry?
It would be great.
Yes, Jamie. Probably.
I made a passing comment on the way. I appreciated very much your presentation, only to note that the IMF was not taking full note of the actual policy position, or at least the statutory position of the central bank in the United States, perhaps because it didn't fit conveniently into the frameworks that it prefers. But the US does have a dual mandate, which includes full employment. And you did mention that later on, which is, but just an improvement over the IMF. I thank you for that. I had a more substantial comment on the whole situation that we're in, which is looking at your numbers. It does not appear that the data that we have reflect in any very substantial way the magnitude of the crisis that we happen to be in, which we clearly know to be the case. And I suspect that the reason for that is that we don't have the full information in the monetary statistics yet about what's going on, or maybe they're not fully reflective. But it seems to me that we're in a very substantially different situation from what proved to be the case after the last crisis. That after the last crisis, the mortgage-backed securities markets were distressed, and other facilities, money markets, and so forth. And the Federal Reserve and other central banks bought up those assets on the assumption that, by and large, at the end of the day, they would mostly not, they wouldn't go bad en masse. That there would be a recovery and that they could produce a recovery. And that's largely because households, however distressed they may be, tend to like to hang on to their houses and eventually to pay their mortgages if they can. So that situation, although there were many, many foreclosures, didn't end up in being the kind of debacle. And likewise, the TARP, the Troubled Asset Relief Program, was eventually closed out without major losses to the Treasury. But now, if I look at your list of what the Federal Reserve is doing, it seems to me very heavily weighted toward the corporate sector. And the corporate sector is in a very different kind of position. We're treating this as though it's a liquidity issue, but we know that the aircraft industry isn't coming back. We know that the airlines are not viable at the current loads or anything close to them. They aren't viable under if public health, elementary public health is imposed there. We know that there will not be commercial construction for a long time. We know, we talked the last time I was on this seminar about the automobile industry. People are not buying cars, and if they're not using their old cars as much, they're not going to need them. So we know, just go down the list of the corporate sector, which came out of the last crisis and then issued a lot of debt in order to buy back its own stock and fuel the stock market. And is now very, very highly leveraged. And it seems to me that we're looking, when we talk, that the central banks are treating this as though it's a liquidity problem. And as we all know, it's often not. It's often a solvency problem of a very profound kind. So you said at the end, or you say right here on the slide that's there, what should be done with the debts? So stod delet strikes me as a very important question because there's just a mass of them that are piling up. And not just corporate, but also, again, household debts, mortgages, rents, and every kind of debt. And the incomes are not there. I mean, you can throw money at those at them to try and keep those flows going for a while, but at the end of the day, the incomes to restore those, to pay off those debts, are not going to be there. So it just strikes, they're just not going to be made up. So it strikes me that we're really looking at a very, very, very big problem, and that you alluded to, but the central banks perhaps are not fully cognizant of at this point. Thank you.
Thank you.
Thank you for this comment. Mikhail, would you like to say something?
Yes, I just react a little bit. Actually, as I have already said, of course, this is the case that now the problem is not in some kind of specific financial market segments or the spread of financial crisis like it was during the global crisis. For me, what is important that during the global crisis, some set of instruments have already been established, and these instruments could be reintroduced now, some of them, not all. If you compare the lists of instruments before, I mean, global economic crisis during that time, of course, they are different. And of course, I fully agree that now the focus is mainly on other sectors, which I have also mentioned. But the focus is not only on financial markets alone, but also on corporates and households. Because of the specifics of the US financial system, they can influence these sectors through financial markets. Through maybe some bonds of corporates, some credits of households, which can be done through these instruments. But again, I think that, of course, this shock, I hope, will be temporarily. But anyway, the problem again is with, from my point of view, with fiscal policy. Because, of course, the main focus again will be on fiscal policy, and there will be the problem with fiscal deficit, and somehow, of course, again, the Fed will be engaged in this process of asset purchasing. By that I mean the purchases, first of all, of course, of government bonds.
Yeah. Let me just add to what I said, because you mentioned the facility for state and local governments, which gets specifically into the fiscal question. Yeah. And it's there, and they could take advantage of it. But the problem is that they don't want to, because they're restricted to running balanced budgets. And so what they're doing is they're either don't want to or feel legally constrained not to take up the facility to anything like the extent that they could. And so what's happening is that the state and local governments are preparing to cut their budgets because their tax bases are way down, tax revenues are way down, and that is going to be a negative fiscal impact. And so it's pro-cyclical going into a very steep depression. And we're just at the beginning of that in this country. So you're right, it's a problem for fiscal policy, but it's a problem compounded by a kind of implosive dynamic which is already underway.
Thank you.
I can't overemphasize how concerning the whole thing is from my point of view.
Okay, colleagues, who would like to?
I'd like to.
Questions? Oh yes, please.
Yes, I'd like to ask Professor Golovnin about this mix between the fiscal policy and monetary policy, because now I can consider that together it's a whole one. How he will see in the future from the theoretical point of view, not only from practical point of view, this interrelation between the fiscal and monetary policy, especially in Europe, is there so closely linked. And this is the first question. The second one is concerning the debt issue. How, because the debt issue is different in different zone. What is his opinion on how to manage this big debt in Europe now? It's more than 100% and different according to different countries. Thank you.
Thank you. First of all, I would say that I cannot now answer the second question, because this is really a very important and a very difficult question for Europe. And I think this problem will be even larger after this crisis. But I'll start with the interrelations of monetary and fiscal policies. We remember that this split between monetary and fiscal policy, which we have seen before the global economic crisis, was introduced actually in the previous century because of many cases of high inflation and hyperinflation, when a central bank practically was financing the rising public debts. So again, the problem for me is somehow to establish, if not a rule, but some kind of interaction, not to follow the path which we have faced in the 20th century. I mean, those spiral of interaction of monetary and fiscal policy, which can lead again to high inflation. Now it seems that this is not a threat now, but this could be a threat in the future, and that's why I added to this too the macroprudential policy, which actually is not the problem only of public debt, but also the problem of private debts, to which also all these kinds of policies is now involved, because actually we have seen the bailouts of private debts even during European debt crisis, because of course not all the European debts were connected with public debts. Some countries were, of course, there were different cases, and some countries were paid with private debts, and we saw the commercial bank bailouts in several countries. So now we should somehow establish the interaction of these three pillars, let me say. I think monetary policy, fiscal policy, and macroprudential policy. And macroprudential can be some kind of limitation on the increase of debts. But this is like some kind of, we are walking in the dark now.
Thank you, Mikhail. There are two people, I see it from chat, who want to ask a question. So I'll begin with Jacques Sapir and then Anton Moiseev. Jacques, you are welcome to.
Yes, thank you, Alexander. Well, my question will be very simple. You said that what is needed is an increased interaction between monetary policy, fiscal policy, and of course, budget policy. If I am reasoning in the Eurozone, do you think that this kind of integration is to create a problem with the theory of central bank independence and could put into question the very idea of central bank independence in Europe or elsewhere?
It has already put. It has already put during the global economic crisis when these measures were introduced. It has already put during the monetary policy in the euro area after the European debt crisis, because to some extent they somehow try to overcome it through not direct purchasing of government securities, but anyway, this is some kind of, of debt financing anyway. And what we can see now, again, if we look at Europe, the question is more difficult because in Europe there is a single monetary policy, but there is no single fiscal policy.
In
So
Europe,
the interaction is even worse.
I will slightly disagree with you. I think that the European Central Bank, of course, moved slightly out of its initial status, but that has not, to some extent, that has not involved a complete revamping of the system, and the more so, no real control from political bodies, be it the European Parliament or the European Council, onto the European Central Bank. This is, by the way, one of the questions implicitly asked by the Karlsruhe Court, the German Constitutional Court, by its decision of May the 5th, some days ago. So I am re-asking the question: are you thinking that the current crisis could lead to a complete turn on this point of central bank independence?
Of course not. Of course not. There would not be complete turn, as it was not before. It is a kind of, it is a kind of moving to some direction. It is not moving towards, of course, full central bank dependence. And what I have said, that there is a need of interaction, because central bank could not be, for example, independent from the economy as a whole. And it was not actually when it started to implement these measures.
Okay. Thank you. Anton Moiseev would like to pose a question.
Thank you, Alexander. Mikhail Yuryevich, I have a question on the very last line of your presentation about cross-border capital flows. Do you think this matter should be in the mandate of the central banks? Who should impose such measures? And if you allow me a minute, I will explain what I mean.
Of course.
When you impose any limitations on cross-border flows, then your country either benefits from keeping the money within, or it can lose money because cutting the capital flows, you also cut some import and export flows. If your country is very autonomous, it can produce a large variety of products and services. You are basically benefiting from cutting the capital flows. If you are very dependent on some kinds of importations, you can lose, you can be one of the losers. So who should decide this? Is this within the mandate of monetary powers, or should it be within the government as a whole mandate? Or should we speak here about some supranational decisions on which capital flows are benefiting the global pie, increasing the global income, and which are destroying markets, moving hot money, and which capital flows should be cut. So who should be the decision maker? Yeah. Thank you.
First of all, thank you very much for the clarification of my thesis, because of course, my thesis was on speculative capital flows, so-called hot money. Actually, because of the large turnover of this capital, they actually cannot even influence the trade flows, because the turnover of trade flows is much less than the turnover of capital flows. So, for example, if we look at the current account imbalances, they do not fully reflect the whole turnover of capital flows. This is just remark. This is not the answer to your question. But the answer is, of course, we need some supranational power. Because if we would do it on national level, as it has already been done in some countries, and some countries, of course, have introduced capital controls, some emerging markets have introduced capital controls. Some advanced economies have introduced capital controls, for example, Greece, Cyprus, or Iceland, after the global economic crisis. Of course, this somehow distorts the whole capital flows, because they actually cannot influence on these speculative flows on global level. This is just a point for further discussion during the international financial system reform, which is now, from my point of view, somehow stagnating. And we have, for example, seen some drawbacks in this reform just several years ago, when, for example, we have a strong statements on, for example, banking system reforms, I mean Basel III and so on. But actually there were no reforms in, for example, stock market or bond market. And I think from my point of view, this could be the next hot points in international financial system. Like, for example, it was with US stock market when Fed had reacted with interest rate cut in 2019. So these are the problems of these speculative flows in different still unregulated parts of international financial system. And of course, these measures cannot be effective without supranational bodies or some kind of supranational regulation like Basel III, which can be implemented by national bodies. But of course, central banks, but not only central banks, some financial market regulators should be involved in this process, because of course this process cannot be started without some kind of impetus from national level.
Okay, thank you. Please, colleagues, who would like to make a comment or
I would.
Professor Galbraith?
may I ask you to raise a hand? You have such an option, or please write in chat, because I don't see everybody on my screen. Or
there we are.
okay.
Yeah, just a brief comment on capital controls. I was an advisor to the finance ministry in Greece in 2015, when the country was obliged to impose capital controls by its European partners. And under those conditions, and I think more generally, the central bank was not involved, because it would have actually completely out of the control of the government and was not a reliable partner. The capital controls were handled entirely by the finance ministry. We simply set up servers and disallowed purchases that were not essential for food or pharmaceuticals and for the duration of the emergency. That was not a choice that was made by the Greek government. It was a choice that was imposed upon it by the European, by the Troika, essentially by the European creditors. In general, and that's I think true in the People's Republic of China as well, it's the government that has the authority over capital flows. In the case of the United States, and I think probably more generally, where central banks have either real or quasi-independence, that is, as a matter of political economy, set up in order to give central banks basically descend historically from large private banks like the Bank of England. And in the Federal Reserve case, it was a cartel of JP Morgan that preceded the Federal Reserve. They're set up in such a way as to give a lot of influence to the major money center banks, and that to put them in charge of capital controls is putting the fox in charge of the henhouse. It's not the way you would run a proper regulatory system if what you want to do is actually have effective controls.
Thank you. Thank you.
I'd like to, of course, I thought about government because if you look, for example, at the examples of capital controls in Western Europe during the second half of the 20th century, mostly the special authorities and most of them were under government control. I think Jacques Sapir knows better than me. But now the situation somehow changed because of the very important role of financial markets. And of course, in each country, there is a specific model, but in many countries, like for example, in Russia, in some other countries, there are so-called mega regulators. Some of them are central banks, so that's why they are responsible for financial market developments in this or that case. But of course, government also should be included in this process.
Okay, please, next. Who is next?
Could you ask a question?
Yes, please.
Yeah, I have a very simple question. Could we compare effectiveness of different measures, anti-crisis measures in different countries? Or it's too early for comparison?
Of course, it is too early as concerning for current crisis, and it is very difficult to compare them during the previous crisis because, you know, first of all, that there were both fiscal policy measures and monetary policy measures. And as I have already said, different countries use different measures in terms of unconventional monetary policy. The whole results can be that if we look at the previous crisis, that unconventional monetary policy more or less help to stabilize the financial sector, but the results for economic activity are rather mixed. So we cannot say that unconventional monetary policy helped to restore economic activity. But also we should mention the external effects. As for me, I have read a lot of papers on these external effects of US monetary policy, and there were a lot of negative effects on financial markets of different countries. But as for current crisis is concerned, I think it is very, even preliminary, we cannot say nothing. Because from my point of view, the time of monetary policy actually has not come yet. I mean, for the full impact of monetary policy.
Yeah. Okay.
Thank you. Olga Vitalyevna Butorina, corresponding member of the Russian Academy of Sciences and Deputy Director of the Institute of the Russian Academy of Sciences, has a floor now to question, to make a comment. Yes.
Alexander Dmitrich, thank you so much. I doubt that there might be a supranational instrument or instruments for managing the challenges we face now, because the crisis is very asymmetric. Though the ECB and the European Commission say that the crisis is very symmetric within the Eurozone, it is not correct because the structures of national economies are very different. And for instance, Spain depends on tourism much more than that it be Germany. And I think that I referred to Mikhail's slides on the emerging markets response to the crisis, to the COVID crisis, that we will see the further divergence of monetary and fiscal policy instruments between mature markets and emerging markets, because we should take into consideration the international role of currencies. Only currencies like US dollar and euro, and probably to some extent, to a lesser extent, the sterling and Japanese yen, they can afford using this helicopter money or producing larger amounts of debt, because people outside buy these debts. But if Russia or Poland try to copy this example, nobody will do it. And so I think that we should, in Russia, think about special instruments that would help our economies, because we will not be able to copy the example of Federal Reserve System or the ECB because of this original, so-called original thing.
I fully agree that we cannot implement the so-called unconventional monetary programs. As I try to focus on another question, which is exactly with what you have said, Olga Vitalyevna, is the exchange rate problem for these kind of countries. That's why, of course, they should focus more on this than the countries which have so-called international currencies.
The problem, one of the problems here, Mikhail, is that regulating foreign exchange rate, we got rid of it because we had it before, and then we faced the situation when the lack of capital controls was not very good with the foreign exchange corridor, because this was one of the problems. This was, as far as I understand, one of the reasons why we in Russia have changed the system to floating exchange rate. I think that if we want to regulate foreign exchange rate, then some kind of capital controls are absolutely necessary. And also, even if we continue to use the free float of the Russian ruble, then I think capital controls, controls for hot money, is also helpful.
I fully agree. That's why we're hand in hand in this presentation. Yeah, exchange rate policy, and after that, introduction of capital controls.
Sergei Konstantinovich Dubinin raised his hand. You are welcome, Sergei.
Yes, thank you, Alexander.
Sergei is a professor. He is a chair at the economic faculty of Moscow State University, and he used to be our central banker, main central banker. So you are welcome, Sergei.
As you remember, certainly, I was against the capital control during all my practical and theoretical and scientific life. And I want to stress that this measure can be used effectively only in complex with absolutely other financial measures and other financial system. I know only one really successful example in big scale. It's a Chinese financial system, very closed, with a difference with the yuan internal and external, so-called online yuan or offline. And the banking system and even the financial market of China is really closed for all the flows of the capital funds. But even in this country, they started some relaxation of the control for foreign banks and for participation nowadays in the internal branches in Chinese banks, and some operations for participation in the investment in Chinese internal securities. So capital control, from my point of view, is absolutely impossible in the open financial market. And I cannot understand how to, in any European country, even in Greece, it was no use really for, maybe I'm not right, but that policy was prepared for the moment when the possibility for Greece to go out of Eurozone, and that step was aimed to prepare Greece economy for this very hard stage. But without this target, it have no real effect, or positive or negative, for Greece economy. So I don't think that it's possible to organize such policy in any European country, in even outside European Union, maybe in some context of changing and return back to government control in all the economic spheres. Thank you.
Thank you, Sergey.
May I react a little?
Yes, you may, of course.
First of all, probably there is some kind of misunderstanding, because by capital controls, I don't mean that all the kinds of capital should be controlled by the government. It does not mean by the International Monetary Fund. A lot of countries, a lot of emerging markets are using these kinds of controls. And for example, there is an example of Malaysia after Asian economic crisis. There may be some mixed evidence, but anyway, after 2010, there was a widespread literature of International Monetary Fund with at least mixed results, but also with some positive results of capital controls, which were introduced, for example, some Asian countries, some Central and Eastern European countries, and also some Latin American countries. So actually, we could not see why we should compare themselves with Greece. I think China or Brazil or Malaysia are more important countries with which we should compare Russia, not Greece.
If I may, I would like also to add a few words to this. You know, Sergey, probably we differently understand the sense of capital controls. When I am saying about capital controls, and I believe when Mikhail is saying about it, we mean not some, you know, there are very different types of capital controls. One of them was invented by James Tobin, who proposed a tax on foreign exchange transactions, just to make capital flows of the flows of hot money not so attractive as they are when this tax is absent. So this is also a mild instrument, but a mild instrument, but quite efficient one of capital controls. And it used to be used in different countries and in different forms. Then, you know, what's interesting, in autumn 2008, I had a talk with one of the members of our government, quite influential one. And I asked him, why are you not introducing capital controls? Because by not introducing these controls, you create a lot of additional problems to the economy. And you know what his answer was? And I believe that it was quite correct from the point of view of what they were really doing. He said, you know, we don't need to introduce formally capital controls because the main exporters in our country are state-controlled companies, and we just say them to sell foreign exchange on the internal market, and this is a type of capital control we use. But what I'm saying, what I was sure always, that it is much better to use open measures of capital control than to make such indirect, you know, to use such indirect instruments. Because, of course, they could influence Rosneft or other major corporations, the Russian Federation, to sell their foreign receipts, foreign exchange receipts on the internal foreign exchange market, but they couldn't block the flow of private investors, foreign investors. Those flows in Russia and out of Russia. In fact, there are a lot of examples when even quite developed countries use capital controls. And for instance, it was IMF who recommended to Ukraine to use capital controls a couple of years ago, not Nikipelov and not Golovnin. And you heard what Jamie was saying about his making such proposals for China, for Greece, and so on. So, of course, one has to weigh up whether it's efficient or not, but it seems to me that one should not just refuse to discuss the problem. Yes, please, you are welcome.
Саша, я хотел спросить.
Yes, Ruslan.
Misha, congratulations to your presentation. And I would ask you, maybe you can satisfy my curiosity about the destiny of money box in light of Russian monetary policy. What do you think about that? It was really a reasonable solution for our country. You know that I was a lot of objections against it, and I think it's a big fiction from my point of view.
Do you mean inflation targeting framework?
No, I mean a piggy box, a money box.
Saving
up the money in so-called
sovereign wealth fund.
Yeah. Okay. Because I suspect that we could avoid this this operation, and nothing would change. Or do you think another way? What do you think about my objections against this operation?
Okay, but as far as I understand, these objections are more from fiscal side, not from monetary side. Because actually when the fund was created, it was some kind of, I just refer to Alexander Dmitrievich, and I fully agree with him, that this was the mix of monetary and fiscal policies before the global economic crisis, when monetary policy was responsible for exchange rate, and through this fund, the fiscal policy again But it was responsible then for monetary side, not vice versa when it was after the 2017. But again, of course, this is a kind of interaction of monetary and fiscal policy. But for the fiscal policy is concerned, I think the idea of this smoothing expenditures, for me, maybe it makes sense, but again, you can do it by regulating fiscal policy in some other way. In our case, it again was like some kind of exchange rate policy. And I have already said that from my point of view that the distribution of roles should be more clear when fiscal policy is responsible for fiscal side and monetary policy is responsible for exchange rate side.
Thank you. I see Sergey Dubinin and Jamie Galbraith keeping their hands up. Would you like to make comments or put questions? Yes, please. Sergey, you are welcome. I don't hear you. Your microphone is switched off.
That was the last remark for you. Sorry. So I finished.
Okay.
Not to discuss.
Okay. Jamie, your hand is up. Yes.
Observations on capital controls, which of course are built in to the IMF charter. They were characteristic of European economies up through into the 1970s. They've been, as Professor Dubinin said, fundamental to China. I had some participation in those discussions back in 1995 when I was a technical advisor to the State Planning Commission on these questions. In the case of, and in India too, in the case of Greece, the situation was a little different, I think, and that it was not the part of a strategy by the Greek government to exit the euro, but rather something that was imposed to slow or forestall an ongoing run on the Greek banking system and an imminent revocation of the emergency liquidity assistance, which would have collapsed that system and left Greece with absolutely no choice and with potentially a very disruptive situation, which I was also involved in trying to anticipate. It was interesting, though, that the imposition of capital controls at that moment had some very interesting effects, which I don't think we anticipated in the finance ministry in Athens. In particular, as people became aware that they might have their banking accounts effectively confiscated because there was no effective deposit insurance, they took steps to minimize those liabilities. And among them, they paid their taxes and covered their bills. So funds flowed into the Greek treasury in those first days of July 2015 to an extent that we did not anticipate. Quite surprising. But it was irrational when you think about it. People got their liabilities out of the way and so protect what assets they, so that those were actually, so that they, if their assets in the banks were confiscated, they weren't very much, wouldn't be very much left. What it comes down to, it seems to me, is that capital controls are incompatible with open financial markets. That's the point. Their downside is that they expose the government to risk as far as credibility is concerned, as far as maladministration, corruption, political favoritism. All these issues have to be dealt with, and that they're not run properly. And then of course they're a mechanism which won't succeed in their purpose. And that becomes an issue of governance.
Thank you. Yes, colleagues. Yes, Mikhail, yes, please. You are welcome, Michael.
Thank you.
Michael used to work both in our government, and he also worked with the banking system, international banks. He was our representative in European Bank, and he also worked in Greece in international bank. Yes, you are welcome.
Well, that's a rather mixed background. Well, anyway, I'd like to start with saying that, well, I really highly appreciate the presentation made by our principal panelists today. It is true that the world has entered the era of very low interest rate. Well, as been said already, that the Federal Reserve has set already this rate at zero level, actually. In UK, the Bank of England set it at a record low level at 0.1%. Well, recently I ran into very fresh focus made by the specialists of the European Bank for Reconstruction and Development. And they believe that, say, EBRD countries of operations probably will be contracted by the virus by, say, 3.5% in 2020, with the probability of having recovery at about 4.8 next year, I mean 2021. For Russia, these numbers are the following. Well, it is expected that Russia will lose roughly 4.5% of GDP this year, with very high probability of, well, getting back next year, well, say somewhere around 5%. But again, it's a matter of probabilities, it's a matter of focus. Well, I'm really quite really welcome the fact that our discussion of today was turning more and more toward the Russian realities, and not only, in academic terms, and getting more and more practical, really. So my question is the following. In order to help the Russian economy to make this, well, a radical turn, from the loss of 4.5% this year to, well, 5.8 next year, it should be reinforced probably by very active policy, government policy, and monetary policy, of course. This recovery cannot happen automatically, right? So my question is the following. Well, if we today, if we're turning to the discussion on the very practical steps of the national regulators, what would you expect, what steps would you expect from the Central Bank of Russia in order to facilitate this, well, potential growth? You have mentioned, well, some interaction between tax policy and monetary policy. Well, probably my understanding of the current Russian policies is really poor. I cannot allow that. But well, anyway, I don't see any huge interaction, in the Russian monetary policy and in the Russian tax policy, at least for the last, say, 5-10 years. So maybe I'm wrong, but I would appreciate if you could elaborate on that a bit. And another question. Yes, I know that this Tobin tax is being used in many countries and sometimes with obvious success. But well, I'm wondering what would be the right timing for that. If we decide that would be absolutely great for Russia to introduce this tax, if timing really matters here, would it be better? What would it be better to introduce it on the level, on the low market, or in the face of the high market? It's really important because, well, if, say, you make a wrong step here or untimely step here, you just may scare off the capital growth, inflow from the country. So I'd really appreciate your comments on that. Thank you.
Thank you, Mikhail. Yes, Mikhail Golovnin, you are welcome. Would you like to?
Yes, thank you. I think as far Russia is concerned, I wouldn't say yes, that there was interaction between monetary and tax policy, because tax policy is only a part of a fiscal policy, and probably it seems that monetary policy, I don't see how it may interact with tax policy. If we look at different parts of fiscal policy, of course, debt policy is the mostly connected with the monetary policy. By the way, as there were some conversations, I wouldn't say whether it be or not, it can be, again, as Alexander Dmitrievich said, as some kind of selective measures. When, for example, I have already said that fiscal policy, of course, should have a much more pronounced impact on Russian economy. And I think we could not say that let's now be our monetary policy more accommodative and we will solve all our problems. Not. I think that the fiscal stimulus are much more important, but what is important also is that actually we have now a very low public debt. Of course, in short term, can be some problem if we could raise it. And the problem will be who will buy this debt. And as far as I know, there were some kinds of conversation that state-owned banks in Russia, which are largest banks here, can buy these government bonds, for example. Of course, this is not actually, again, some kind of common monetary policy or conventional policy with some kind of selective measures. That's all. What for monetary policy itself is concerned, I think that the right timing, of course, we need for the next interest rate cuts, because now we still have a positive in real terms interest rate of the central bank, because sometimes we heard that now our monetary policy became more accommodative. No, it is not much more accommodative than it was before. But for me, this is not the case now. Now we cannot support our economy just through the interest rate cut from the point of view of monetary policy. What is the interaction with fiscal policy is concerned, I have already mentioned with issues concerning the exchange rate and the issues of debt policy. But for me, if we look not in short term, this is not the case, because of course I think we shall find the buyers for our debt. As we can see, a third of buyers of this debt are non-residents.
What about the timing for
the timing for
Tobin tax?
Yes, I understood this, and I come to this point. Actually, we have already, if we look in a broader term of capital controls, for example, we have reserve requirements on capital flows. It is not widely heard about it, but actually there are. We have reserve requirements for deposits, and among them the reserve requirements for foreign liabilities. It is some kind of, capital controls, but it is a very small measure. It is only one measure. So it only can be, it also can be the instrument. It also was used, for example, in European countries. But what is the case for me? Of course, we should introduce it on the, let me say, upside trend. So just in order to not to overheat the markets.
Well, thank you.
Thank you. Thank you. Yes, colleagues, who would like to say something or to put more questions? Or we are going to end our seminar today. Okay, then, I think that we have to thank Mikhail very much for his presentation, for his answers during the discussions, and of course all those who took part in this discussion. I would like to say just a few words on this. Today it was quite interesting for me, and I was quite startled when I read that Anatoly Chubais, while he quite severely criticized the authorities, that they have been saying a lot about getting out of the oil needle and doing practically nothing. I was quite startled because just a few weeks ago, he praised Alexei Kudrin for his policy of creating reserves in foreign exchange. It seemed to me that today he didn't quite understand that he was saying something very contradictory to what he was saying a couple of weeks ago. You know, we have created quite an interesting system, and Mikhail mentioned it, in fact. I would like just probably a little bit to emphasize it. You see, we introduced free flow of capital, transnational free flow of capital in and out of the country, practically with no controls, exception being what Mikhail mentioned right now. We received a very significant volatility of foreign exchange rate. All this period, more than 15 years, we have had an extremely significant surplus on current account of our foreign exchange balance, of our balance of payments. And if you look at our official statistics, you'll see that an average is more than $65 billion a year, an amount of our positive of the surplus. So during all those years, we practically have credited the outside world with $1 trillion with no interest rate, And at the same time, the central bank was quite reluctant to reduce the interest rate. And in this system it has created, it was quite right, because it was afraid that if he reduces quite fast, the interest rate, then this would lead not only to inflation, which was mentioned, but this would also lead to accelerating the capital outflow. And as a result of the fact that for many years we have kept our interest rate much higher than the efficiency of capital used in real economy, we have had a stagnation in investments and in economic growth. Of course, we can continue, we can go on with such a policy, hoping that in the long run, the interest rate will be normalized and then the economy resumes. But are we not thinking about the costs of such policy? Shouldn't we think about doing something in order to create the conditions for economic growth, for investments, and not just saying about quite correct words, by the way, but not just saying them about the climate for investment and so on. You can have an excellent climate, but if you have such a high interest rate, nobody would invest, never. And you cannot, and the central bank could not reduce it quickly just because because of the whole system which has been established here. And this is to a certain extent my position on the question which Ruslan has put about those reserves which have been accumulated here. You know, I would like to emphasize that those reserves, foreign exchange reserves, have been created not only in order to create a cushion of security, so to say, but it was also a part of the whole system. In fact, it was an instrument of taking away money from the economy, sterilizing the rubles. And that was a division of functions between the central bank and the Ministry of Finance, which Mikhail also mentioned here. In some narrow sense, it was quite efficient. In some narrow sense, it was quite efficient. But in a broader sense, if you looked at the economy as a whole, at how it has functioned all those years, well, it seems to me that nobody can be quite glad with it. Yeah. So this was, I'm sorry, this was just my point of view, nothing more. I also wanted to take part in this discussion. So thank you so much, everybody, for taking part in our seminars. I would like to remind you that we have our seminars every Tuesday at 6 o'clock Moscow, 10 o'clock in Texas for Jamie, yes. And at the next seminar, our main speaker is going to be Mateusz Novak from Slovenia. And Slovenia is the first country in Europe which declared that pandemic is over in that country. So we'll have a chance of listening to him about Slovenian experience in this crisis. And thank you so much, and take care. Bye.
Yeah. Thank you for the opportunity to present my report.
Thank you. Bye-bye.
Bye-bye.
Спасибо огромное, с большим удовольствием.
Спасибо, Миша. Goodbye.
Спасибо, Михаил Юрьевич. До свидания. Всего доброго. Спасибо.
Спасибо. До свидания. До свидания. Спасибо.
Goodbye, everybody. Jamie, goodbye.
Bye.